Welcome back to another Cardano video. Unfortunately, it's playing out exactly as I have been predicting here on the channel. So with this 200 EMA and the neckline of this head and shoulders pattern being lost on that liquidation event, there was a move back up, right? But I warned you all, unless we're seeing 82 cent recovered, my expectation is that it will attack and try to go lower than this point here, 63 cent, the support that it created on the liquidation event. This is simply because the pump back up is just to test lost support now as resistance. And for me to switch my bias up, I need 82 cent to get recovered. Unless that happens, I'm expecting lower. There was an attempt to get up there. It failed. It didn't even get past 74. So with that being the case, my expectation is that it's going to continue filling in the wick. The next level its support it can find itself at is 51 to 55 cent. So that is where it could potentially bounce. But that bounce is not good enough. That bounce must recover 82 cent. And I'm telling you now, that is not likely. We need something crazy to happen. We need Bitcoin to start pumping like crazy, like no tomorrow. And it's very unfortunate because not even a week or two ago, when this was holding, this was forming an inverse head and shoulders. The entire year was spent forming and accumulating in this head and shoulders pattern. That would have taken it, had it broken out of this resistance, all the way up to almost $2 per Cardano token, where we're now talking about potentially going sub 50 cent with this breakdown. It's not a scenario that any altcoin holders want to experience. And in this scenario, I wouldn't want to hold altcoins full stop, period. The market is no longer bullish. The expectation is going to be for continuation lower, including Bitcoin, unless Bitcoin once again wakes up right now, and it has to be before the weekly candle close. And next week it needs to be pumping. And in that pump, Cardano has to recover 82 cent. Otherwise, it's just going to eventually fail and continue rolling over. I'm going to be here to update it as it develops. And if I see anything to change my bias, I'll be the first to let you know. Just like I was the first to flip bearish right over here on the loss, and that the pump back up is not going to work out. That is what you've seen. I'm not here trying to lie to you. This is just basic support and resistance. Support lost, expectation is now downtrend. What we see now, a lower low. And this was a lower high, lower than the last high. So not only does it need to recover 82 cent, technically needs to break this high 90 cent as well. So it just seems like the job that it has in front of itself is going to get harder and harder and harder each support that it loses, because it's got another resistance that it needs to recover. And it's most likely going to fail. That is just what a bearish market is about. So that is the unfortunate truth. The whole year was spent actually in a dead cat bounce scenario where you bottom out, form a bullish pattern, but fail to create the reversal wave. Even with this bullish pattern and the neckline down here at roughly 90 cent, we'd also need to see a further break of these previous highs here, $1.20. And at that point, we would expect these higher price targets. So even with this breakout here, it's just like a precursor. This target technically becomes valid thanks to the neckline break, but it will not happen if $1.20 is not broken, because we're not just focused on one strategy, there's multiple. So if you want to learn that, why I have my certain biases, and when they change, use the links down below, book in a one-to-one private video call with myself, or do it at your own pace using the ebook. You can also join my Discord community and request as much TA and ask as many questions as you want in there. Like, subscribe, comment, and share, and I'll see you in the next one.